Welcome to Web3 Watchdogs, the podcast that takes a deep dive into the world of Web3 security, compliance, and risk. Join Michael Pearl as he interviews executives from across the Web3 industry to uncover the challenges and opportunities of this rapidly evolving space. Web3 Watchdogs is sponsored by Cyvers, your one-stop shop for Web3 security and threat mitigation. Cyvers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cyvers.ai. That's CYVERS.ai.
Well, hello everyone, and welcome to the Web3 Watchdogs, the podcast that focuses on everything security, compliance, fraud, risk, basically anything that has to do with safety and security in the Web3 space. And today we have a guest that is long waited. I really tried to get him on the podcast, and I'm so happy, and I really appreciate that he took the time to talk to us. Antonio Alvarez, Chief Compliance Officer of Crypto.com. Antonio, welcome.
Thank you, Michael. Thank you for having me. A pleasure to be here.
Thank you so much. So, Antonio, why don't you just introduce yourself? You had such an extensive career. I just wrote down here that you were in Visa, Western Union, Coinbase, probably some other places as well. And then you landed at Crypto.com at this very pivotal role. So please tell us about your background.
Right. So I started my career in accounting, funny enough, with American Express. I spent about 12 years with Amex. And throughout that career, I shifted a bit. That was a great thing about Amex. It allowed you to move laterally and explore different areas within the company. And somehow or another, I ended up doing compliance, really in the early 2000s. When the Patriot Act was coming up, all the sanctions activity was coming up following the 9/11. So I was in the thick of things in the retail financials space. I was there, as I said, with Amex for about 12 years, and then I moved to Visa to try and continue to explore and learn. It's always about learning, learn about a new thing, right? Going from a closed loop payments into an open loop payments. It was a really exciting time at Visa. This is early 2010s now. You're looking at Square coming up and Apple Pay coming up and Stripe and all these very chips and very incredible innovation that was happening at the time. But I needed something different. I needed to continue to evolve, continue to learn. So I joined a friend who was setting up Woo.com was called at the time, which is Western Union Online, to actually do remittance around the world with electronic funds rather than cash-based. This was the time that Western Union was competing with Zoom and TransferWise, and all these were coming up. So it was an exciting time to get into a new space, a new payment space. On the remittances, gave me a chance to travel around the world, the places that I had never been before, and other places that I don't ever want to go back again. So very interesting time. From then, I had a couple of smaller gigs and ended up at crypto with Coinbase. I got bitten by the crypto bug. And it was just always trying to look for something new, something. Where's the next frontier? Where's the next set of innovation, next set of learning that I can get from it? I grew a lot with Coinbase. I learned a lot about blockchain, and after a time, I thought I was ready to actually build my own program in the crypto space. And Crypto.com was a great fit. It was a great fit because Crypto.com has always been very focused on the retail space. We cannot live between the traditional and the crypto space. We focus on fiat rails. We focus on prepaid cards and fiat wallets, as well as crypto. So it was like that combination that I was looking for. I joined them about 5 years ago, and it's been an adventure, a lot of fun ever since.
Yeah, so speaking of Crypto.com, it's really a giant in the crypto space. Tons of sponsorships, and I can imagine that your distribution around the world is immense, and I would love to hear about that. So please tell us a little bit about Crypto.com. What's its mission statement? How many users do you have? Where are they located? And what makes you different from, let's say, Coinbase or Binance or any other crypto exchange?
Yeah. So crypto.com, we've always been, our mission, let me start with that since you asked, our mission is to put crypto in every wallet. All right. So we've, the way I explain it, not that the company says this, but the way I explain it is that crypto traditionally is being very Wall Street focused. People go into crypto to look for money, to make money, to invest, take risk, very volatile. Our focus is to bring crypto to Main Street, to the everyday guy, to the people that need not just crypto to make money and to speculate or invest, however we want to do it, but also to fulfill day-to-day financial needs, right? So our offering is really wide. We offer an exchange for investment, but we also offer merchant acquiring. So merchants can accept crypto for everyday Web3 type commerce. We offer local wallets. We offer DeFi wallets. We offer yield products. We offer a card product to be able to move easily in and out from your fiat rails into your crypto. And trying to embed crypto into as another everyday financial tool for the average person to get used to it and to learn about the advantages of being able to that crypto brings to you. So we're now we have about over 125 million
Wow.
downloads of the app. We operate all around the world, all but about 30 countries where we decide not to operate. We hold licenses in over 50 countries, which is what differentiates us more than anything to everybody else, to all our competitors. One is first that our focus on retail and our focus on the everyday use of crypto. Um, and secondly, our focus on providing local services and being embedded into the local financial service industry of each one of the main markets in which we operate. So that if you're in the US, you have access to ACH, you have access to debit cards, you have access to, or if you're in Singapore, you can do fast payments, you can do, pay now, you can do all the different um, local fiat rails in order to power your usage of crypto.
Yeah. I've used Crypto.com myself, and I can say that the platform is super friendly, very rich with features. And
Mhm.
it's funny, they call it centralized exchange, but it's much more than an exchange. Not only Crypto.com, by the way. If you use Binance, if you use Coinbase, it's essentially a financial institution with so many different features and so many different ways of investing and trading and transferring value. So exchanges have come a long way. That's for sure.
Yeah. So we in our platform, for example, the US, which is the most developed one, you can use your crypto to buy a pair of shoes, or sell your crypto to buy Apple stock or Tesla stock, or place a prediction contract as to who's going to win the Super Bowl. So that there's such a large number of capabilities that we're building, all on based on the crypto and the blockchain capabilities and the blockchain technology that is the differentiator.
hmm So, I can imagine that a big element of your work is anti-money laundering. And this is obviously, one of the biggest problems with crypto exchanges, given the fact that you are retail facing and you're receiving inflows of billions of dollars per day and outflows and there's a lot of activity with so many people around the world. How do you manage all that? How do you manage this infrastructure? And I'm also, curious to hear how do you do that from the strategical level, because obviously we'll talk about the tools and we'll talk about screenings and everything, but
Mhm.
from the strategical standpoint, managing so much funds in different currencies, different tokens, fiat on off ramps and so on. How do you do that?
It's a great challenge to have, right? So at the end of the day, money laundering it's been there for a long time, right? As long as there's crime, the number one purpose of crime is to get money. right? And then you get illicit money, and then you have to wash it. Crypto just provides another venue for users to for gangsters and criminals to launder their money, right? We don't generate new bad money, right? Well, in a way, but there's some ways to do that. But the main focus is how do we? My main focus is how do I keep the bad guys from using my products to launder their money, right? However illicit sources there are, being crypto or non-crypto, right? And for me, the differentiator or what makes it a little bit more different than the traditional space, the other spaces that are being like Amex or Visa or Western Union, is the focus on innovation. We're a very innovative space, so having the controls and the compliance with regulations embedded in the product conception, and through the product development, rather than building the product and then bolting on the compliance requirements, it's critical for the success of our products. So strategically, I built my compliance program from the product up, right? So that the first step is sitting down with the engineers, sitting down with the product designers, and embedding, understanding the controls that need to be embedded into the product, right? So that we don't build the car and then say at the last minute, oh, we have to put on the seat belts or we have to put in brake lights, right? That those are features that are designed within the car, so that the car becomes easy to use. It becomes, and the controls are just part of the product. One of the favorite things that I like to say to the team is that there are no compliance requirements. There are product requirements to be compliant.
Yeah.
And if you want to drive the car on the road and you want the government to give you a license plate to be able to drive it, you need to have a compliant product. And that's what we're here to do, is to help build those compliant products. Now, once the product is compliant, then building the program that keeps everybody out, right, or the bad guys out, and keeps the users just using that product for good, it's easier that if you have control gaps within the design of the product to start with.
Yeah. And from the strategic level, let's kind of zoom into that, because I have to share with you, I'm often using our platform at Cybers, and then let's say you're taking a use case of, let's say, the Bybit hack or a pig butchering fraud, right? And at the end of the day, you see a huge map where on one side you have the victim that is sending the funds. It goes through many, many layers, and on the receiving end, you usually see centralized crypto exchanges. Because as you said, the goal of the fraudsters, the scammers, the hackers, the criminals is eventually to cash out and to off ramp and to use it with fiat funds and so on. So my question to you is, how do you differentiate? Because illicit funds is a big title. People think that it's a binary thing, right? Good, bad. But when you go to the details, you see that it's so hard to differentiate. And oftentimes, an honest person can receive funds from a bad wallet, or maybe through 3, 4, 5 hops away from a mixer. And eventually he comes to you, he wants to deposit funds. And how do you differentiate between, the good and the bad? What's your threshold for that?
It's very hard, right? Because in addition to all that, the fact is that the bad guy is going to try and disguise himself as a good guy. So the best, for them, they're trying to blend in, right? So that you really need the very, very sharp scalpel to cut out the bad without cutting into the muscle. We try to give always the user the benefit of the doubt. That we're very user friendly focused, because we have those controls within the product, right? So, for example, one of the things that we do, just to put as an example, from a product design perspective, is that our fiat rails are first party only. So you can only receive fiat funds from an account that is under your name in the local bank. And you can also send money to an account that it is. So we do a name matching on every transaction. That it's embedded within the product design
So
And that
just to
used to be,
clarify for the sake of the listeners, if I am a crypto.com user, I have gone through the KYC process. I
Mhm.
can only send funds from my own personal account under my name and not ask for someone to deposit on my name and later on to convert it to crypto to my account.
I'll reject the funds. If I,
Hmm.
if you try to load funds or you try to buy crypto from my account, it'll reject.
Hmm.
Mhm. So
Got it.
those are things that are structural controls that are designed to keep the platform clean, right? But like you say, it's very difficult. It's also very good for us to talk to our customers. I had a case, for example, where to your point, I had to freeze an account of a woman because she was sending a transaction money to a Iranian exchange, right? It's like, oh, well, hold on. I look up the profile and she's not in Iran. She doesn't have an Iranian name or a passport or no known connection. So we contact her and say, why are you doing this? And she came back and said, oh, I bought a purse. And she sent us the advertisement from Dubai, a company in Dubai selling purses, and that was the email, the blockchain address that they were collecting on. Probably the owner or the parent of the e-commerce site was Iranian, and they had their account with. But how's this woman going to know, right? And we don't want to punish her and close an account just because she was fooled or she was, enticed to send money, but she was showing us a picture with the purse that she liked very much, that she bought in a completely normal transaction buying a purse. But so it raises the difficulties of the blockchain, which is it's public, but it's you know you cannot know, you never know where your money is going when you're doing it. But on the other hand, it also enhances the value that a centralized exchange can bring to an everyday person in order to protect them from doing something that they didn't intend to do, like send money to Iran, for example.
Yeah, and it's a great story that highlights your responsibility as an exchange, dealing with so many people, and eventually one single transaction can get you in trouble for sanctioned entities. And I can imagine that there is going to be a big mess also with respect to all your licenses in some countries and so on. So the
Right.
responsibility is immense.
Right.
And I can imagine also that, again, I know this, but probably some people don't know this. You cannot do even 1% of this manually, right? At the end of the day, we said, millions of transactions, billions of dollars. You need to have robust mechanisms that can do it automatically in real time and
Mhm.
can screen the addresses, the destination and the origin of the funds, and do it in milliseconds, right? So maybe you can share a little bit about that.
Yeah, one advantage that we have that we try to leverage over the traditional space is that when you think about traditional finance, most of the banks, even the financial institutions, the non-bank financial institutions have been growing over the years and adapting technology. For us, we're new. We're a brand new company. Our technology is state of the art and it's global, especially because we're crypto. Crypto is a global play. So the ability to centralize, to have all of our systems, all of our data centralized, it gives us a very wide view of our customers across entities, across products, and look at their behavior as a whole in real time, and then which enables us to be able to jump quickly and freeze funds if we need to, or restrict funds from leaving the platform until we are until we are sure of where they came from, or we have that conversation with the user. So that is what makes it all happen, right? That the ability to see everything together. If you work in a traditional bank, your mortgage system and your checking account system and your credit card systems are all separated, trying to bring all of that together and to see a full view. For us, it's very easy. Everything is in one single place. So again, it's by design, right? That gives us that ability that every transaction goes through the same funnel because the final is then the state-of-the-art blockchain technology that allows for the billions of dollars to be processed on a single day.
Yeah, that's very interesting. And you raised another interesting point. The conception is that when you receive funds and you deem them as illicit, then you just block them and you reject them. But I understand that there's more to that, right? So sometimes you need to freeze them, sometimes you need to hold them, sometimes you need to transfer them to another wallet to assess them. So please, can you give us more details about that?
Yeah, if you're in a traditional space, right, you receive a wire or an ACH or fast funds, whatever from another institution, and if you don't like them, you send them back, right? You send them back because you know where they came from. You have a SWIFT code, or you have a BSB code that tells you what bank and what bank account on the other side you can send that money back to. In blockchain, you don't, right? All you have is your originating address. But that originating address could be a hot wallet of a centralized. And if you just return that money back to that, or it's going to get lost because they don't know who of their millions of customers was the one that originated that account, that money sent to us. Also, you don't like in traditional space, you don't get a message, hey, money is coming, right? By the time you get the message, the money is there with you. And so you don't have that ability to reject. You have the ability to then at that point pause, look at the money, engage with the user if it's feasible, and determine if you want to keep the money or not. And if you don't want to keep the money, then you engage with the user as to how they want the money to be returned, if possible. But it is, we don't have that ability to just reject funds.
Mm-hmm.
As a traditional space has.
And from the regulatory standpoint, what are the expectations if you catch illicit funds, sanctioned entities, mixers, and so on?
Every regulation is different, which makes it a lot of fun, right? I have a catchphrase that I read in a headline some time ago. It stuck with me, which is, when you work in crypto, who needs Netflix, right? And there's enough drama and complications and fun every day. And this is one of them, right? The funds return. If you're in Europe, for example, you have to ask the regulator for permission before you can return the funds. There are other regulations where they require you to return the funds no matter what. You cannot keep them. There's other regulations where the funds have to go to the state, to the government, and they take the funds. Others, you have to keep the funds in a separate account and then pay interest on those funds.
Yeah.
So it is varied. It's definitely job security, I can tell you that.
Keeps everyone busy.
Yeah, the level of complexity of regulations, and it's getting more and more crypto, right? As we see the countries starting to regulate or trying to regulate and trying to bring in new trust and certainty into a growing space. The uniformity is not there yet. The same uniformity that we see on the traditional space is just not there. Which makes it incredibly challenging, especially, as I said, when you operate in over 50 different jurisdictions locally.
Yeah, I can imagine that it's a huge challenge. Yeah. So let's switch gear. Sorry.
I'm not counting states, right? These are country level, right? You start counting states, then the number just goes crazy.
Yeah, I can imagine that Canada as well is different from state to state, maybe even Switzerland with the cantons, right? It's
right.
Germany on the federal level, so it's even more another layer of complexity.
Yeah, the US, there's 54 different regulators, right? So
amazing. That's why you're so busy traveling and trying to keep pace with everything, I can imagine. So I wanted to switch gears to talk about fraud. And people are not really aware of the fact that there is more money lost in fraud than in hacks. Even this year, with the Bybit hack, 1.5 billion, we are already way past that with respect to fraud and scam, and especially authorized fraud, right? Where essentially the user sends his funds from his own will, but obviously he is tricked because he thinks that he sends the funds to an investment scheme or to his lover overseas, right? It's a cat and mouse game. And I keep trying to learn about this world, and it's a very dark world, right? So we at Cybers, we're already working with crypto.com, and we see so many use cases. It's fascinating to see that. And obviously we see that from the on-chain level, identifying wallets and fraudulent networks. I'm really curious to see how it looks like from your end. What happens on your end when you receive this alert that says this wallet is a pig butchering affiliated wallet, it's part of a fraudulent network? What happens then?
So it depends. So let me take a step back, right? So first, I like to always bring up front, because I come from the credit card and the remittance space, where fraud is part of doing business, right? We talk about billions of dollars in fraud. Well, you should look at the credit card fraud that is happening on any of the networks on a yearly basis, right? It's in the single digit, in the hundreds of basis points, right? So we're not putting into context that fraud is out there. So when you look at the crypto fraud, the fraud that we see within the crypto space, we see it in two dimensions. So we look at it in two dimensions. We look at it to, one is when our customer is the victim of the fraud, right? So this that they're getting socially engineered, or to invest in a scam, or to bring in their fiat, buy crypto, and send it to a fraudster because it's a pig butchering, or because it's an investment scam, or right. That's one side of the fraud. In those cases, we try to look at the victim and really focus on who we know, which is our customer. We look at how many other products are they using of ours, right? What is their behavior? What is their pattern? What is their source of funds, and what is their exposure to it, and try to limit their ability to do to become the pattern of the victim, right? The pattern of the victim is that they're being socially engineered to open an account in order to bring money, in order to send it to the scammer. So it's a very, very narrowly defined pattern that we can really attack, and we can keep it down. Right.
Yeah, so you're saying that for the most of it, it's newbies that have joined for the first time, bought their first crypto, and then they send it right away. They don't invest it, they don't swap it, they just send it right away.
We can tend to catch those patterns quite quickly. Right. There's another side of crypto, of fraud in crypto, which is where the fraudster has the crypto accounts, right? And they're scamming people on, through credit cards, through ACH, through the normal financial system, because they don't want to socially engineer the victim to open an account with a crypto company. And it's much easier for them to get the victim to send them the fiat. And then they use their own account to bring the fiat into crypto and then mobilize it around the world, and try to launder it around the world. But then that's a very different case, right? That's where we actually look at the patterns of where the money, the velocity of the money coming through, the patterns of where the crypto is going out, and then look to close those channels as fast as possible, to prevent those fraudsters to continue to bring the illicitly obtained money into the crypto world, right? Because we don't want it. We really don't. Fraudsters tend to be very smart. They tend to start very slow with the small amounts, right? And for the most part, we catch it before the big money comes in, right? And we're able to close those accounts and kick the people out of our platforms, before they start bringing in the large amounts.
Yeah, you raised a very good point with respect to the comparison between fraud with credit cards, right, and fraud in crypto. So with credit cards, I can imagine that given the fact that every person that is holding a credit card and every entity that is able to receive funds from a credit card, it's an entity that you can identify to some extent, right? Even if it's a fake entity, but at the end of the day, they have an address, they have a bank account, and so on. Whereas in crypto, you can create a wallet in seconds, and you cannot really affiliate this wallet with everything, with anything. That's our challenge that I see on the on-chain level, right? That knowing how to pinpoint this specific wallet and knowing that it is related to a pig butchering network or investment scam network or an impersonation network, it's a huge challenge, I can imagine.
It is, and because it's based on the behavior of the account, not on the existence of the account. To your point, I can pick up a credit card, and just by looking at the PAN, I can tell you what the bank issued, where it was, what's the currency that is that's underlying denominated in that card, if it's a debit or a credit or a charge or a prepaid card or a gift card. All that intelligence is already built just in the PAN, right? In the 15-digit. On crypto, you get an address that means nothing. Right? You have to go in and see what the behavior of an address is, and until you see the connections and the movements of the money and how they're behaving, that's when you're able to determine if they're good or bad.
Yeah, interesting. And you were elaborating on all the good practices that you have at crypto.com. And I'm a big believer on companies building their own self-regulation themselves. But obviously not all companies are equal with that respect, and there are many bad players out there, many centralized exchanges that are not behaving. And by the way, the industry has more facets to it, right? You have the wallets, you have the lenders, you have the DeFi space, and the regulators step in, right? And then they say, listen, we're going to tell you how to run your compliance to the smallest point. Obviously, it depends on the jurisdiction. Some are more strict, some are more kind of micromanaging, and some are less. But at the end of the day, now we see a huge wave of consumer protection rules in Singapore, in Hong Kong, in the UK, even in the US. It starts to kick in. What do you think about regulation uh, on this specific matter of customer funds protection, whether it's from hacks, scams, fraud, from a consumer protection point of view? And just to bring it down, at the end of the day, in the UK right now, if you get scammed, the centralized exchange and other parties along the way might have to reimburse the client with the funds.
Yeah.
So what's your take on that?
That is specific. Before I get to that, is specific in the UK, which is it's quite funny to see how it's evolving and how the banks all of a sudden are like, oh no, it's not our problem, and because they don't want to pay out. But anyways, there is a lot of regulation coming out there, and I think it's important for regulators to get involved and protect the consumer. Consumer protection creates trust, and any financial services business is built on trust. Right. So the more we can build trust into our crypto and our blockchain ecosystem, the better. Right. So I'm all for regulations at all levels. The challenge that we're seeing is that the regulators are starting to learn what crypto is. Right. So you have regulations that are coming out that are a couple of 100 pages, 300 pages long to regulate crypto. Right. Imagine trying to regulate the aerospace industry with 300 pages, right? Or the pharmaceutical industry with 300 pages. It's just impossible, right? The number of legislations regulating financial regulations, right, that is being issued, even if you just look in the U.S., right, since the 1970s and 60s, right? And they start with the letters, right? And the regulation A and C and F and AG and gambling. And there's like so much because they're getting in because a credit card is regulated differently than a debit card that is regulated differently than a gift card, right? The same way that an aspirin is regulated different than antibiotics, that may be regulated different than the drug that they use to put you to sleep. Right? It's completely different regulations because it's so complex. What I see is the regulators coming in at the very, very beginning and trying to regulate everything with a piece of legislation. So there's a great example for me is the regulations that are coming in with suitability requirements, right? You have to make sure that the consumer knows what they're buying before they buy it. Like, yeah, but don't make me do all those questions when they're buying stable coins. Because a stable coin is very different than a Bitcoin, that is very different than a DAO, right? Or there's so many, or an NFT, right? Or a concert ticket that is being tokenized, right? Is that don't try to put everything under the one scenario. Understand the product that you're regulating, understand it, and make a regulation that makes sense, that protects the customer, but also that enables the industry and the innovation that is trying to promote, right? So there's a lot of regulators looking at custody and how to regulate the custody, how to make sure that in case of bankruptcies, they can claw in and protect the consumer. But on the other hand, you're looking at crypto. Cryptos are global. It's a blockchain. You can't pinpoint the blockchain into a single country because then you kill the blockchain. It's like you can't have the. We need to continue to work with them. We need to continue for them to work with us and understand what is the best way to regulate an industry that they're getting to know and that is evolving so fast that even us within the industry try sometimes it's hard to keep up with. So my heart goes out to the regulators because they have a tough choice and a tough job in front of them.
Yeah.
But it is a worthwhile work to be done because the consumer needs to be protected.
Yeah, I totally agree with you that the regulation needs to be much more granular and focused and much more nuanced, right? But obviously, this is something that will take time. In the
It will.
banking industry, some of the banking laws, I remember, taking this course when I used to study law. Some of the laws there are ancient, right? And they evolved, as the time went by and started from the Medicis and so on. So crypto is very new. Many regulators don't really understand this to the fullest. Maybe they do understand it from a financial standpoint, but not from a technological standpoint. Don't understand all the boundaries. So I'm optimistic about this going there, but it's a very good point about this nuance issue and granularity. And you mentioned stablecoins, and stablecoins now are much bigger than they were, let's say, 3 years ago. 3 years ago, it was the place where you park your crypto when you are undecisive about where you want to go next with your portfolio.
Right.
But nowadays, stablecoins are essentially the biggest transfer of value worldwide outside of the fiat system. And I remember like 2 years ago, people were talking about CBDCs. I think that this train has left the station, right? Because now stablecoins and USDC, USDT in specific are kind of the most widespread currencies in the world. But I see that regulators are having very hard time with them. Can you kind of bring us into this story, because so many stablecoins were delisted from exchanges, especially in Europe? What's your take on that, and how can we manage that?
It all comes down to the specific problem with the stable coins comes down to consumer protection, right? So I'm a old school, right? So for me, stable coins are the crypto version of a traveler's check, right? And if you remember the traveler's check, right?
Yeah.
Where you give somebody money, they give you something, you do whatever the hell you want with that piece of paper. You pay people, you get paid by people, it moves around, and then somebody at some point somebody's going to bring it back to that institution to get that money back,
Mm-hmm.
and that's the whole game, right? It's pretty much the same. The the issue is that travelers checks or gift cards or prepaid cards, any store value product, e-money in Europe, right, has to be issued from a fully regulated entity to ensure the consumer protection, so that when the person that buys it and gives it around and moves around, and when it comes back, the money has to be there, right? And that's the crock of the pot, right? That's the main thing the regulator needs to make sure of. So
Yeah.
when regulators are looking at this vast amount of money that is actually moving around the world based on a pot that's being held by somebody that they don't know and they don't have access to, it makes them extremely nervous, right? How do I know that this issuer that has issued X number of billions of dollars in a stable coin has that amount of money in a pot somewhere safe, and they're not like speculating with it, and they're not taking risk with it and losing money so that by the time the consumer comes in to redeem, there's no money there to be redeemed. That's the number one issue, and that's why they're so strict right now with stablecoins.
Yeah, it totally makes sense. But now that you're saying that, this will probably, bring forward a huge consolidation in that market, right? Because not everyone can actually meet the requirements of, custody and of reporting and so on. So essentially, you cannot be just a small stablecoin issuer. You need to be a giant like Tether or Circle or
Not
something of that sort.
necessarily. You see it on the prepaid card space, right? Because the prepaid card works the same way. You give me money, I give you a card, you go spend the money, and when the merchant brings in the voucher back to me, I pay the merchant on your
Hmm.
behalf, right? And there's all kinds of space, all kinds of sizes that you can do. It doesn't have to be a big one. And
Hmm.
there's another evolution that we're seeing, which is like you mentioned the central bank digital currencies, right?
Hmm.
Which the central banks are starting to understand that having digital currencies at a retail level is very risky for them, right? Unless they want full control, like China, right?
Hmm.
But if they want to allow liberty and allow freedom within those coins, it puts their name and their reputation on a very high risk, right? There's no central bank that would allow a central, there's digital asset or this digital coin to go into a DeFi protocol, right? And
Yeah.
all of a sudden they lose control of it, and that would make them very, very, very nervous. So a lot of them are coming to the conclusion that the compromise between stable coins, which are completely private, and central bank digital currencies, which are completely government based, is the tokenized deposits, which is the bank issued stable coin but without having the backing not being the pot of money, but your actual deposits in the bank.
Hmm.
So it kind of takes the best of both worlds. It becomes a digital currency with value on its own right because it's a deposit. It's a banking deposit, right?
Yeah.
Without having to worry of coming back into a third party that has to hold those funds, right?
Yeah.
Uh, that's I think where the industries is and where the regulators are thinking of and how they're evolving into it.
Yeah, I can imagine that this is also something that will be solved in time, as the time goes by and they do some trial and error, and eventually they come to the right framework.
Yeah, there's a difficulty on that side as well. Is the banks are there to be protected, right? The central bank's job is to protect the banks because they're such a crucial and critical element of the economy of the country.
Yeah.
So while they want them to be innovative and they want them to continue to explore this space, they're not going to push them into it and create a risk that is fundamental to in a piece that is fundamental to the economy. So they have to take their time. They have to really take a step by step and know exactly which way they're going.
Yeah. Yeah. That's very interesting. And I wanted to ask you, we're approaching the end of the conversation, but I
Mm.
must ask you, we're still in the shadows of the Bybit hack. And unfortunately, since then, we had a few more hacks, albeit smaller. But I understand how it looks like from the CISO standpoint, where they essentially have to, guard the gates and make sure that nobody comes in. Obviously, they don't always succeed, but from a compliance chief of compliance standpoint, how does it look like when a centralized exchange loses a significant amount of funds in
Mm.
terms of the liability, in terms of how the regulator looks at you? And I understand I don't want to go into the situation with Bybit, and it's a unique situation, but God forbid something like that happens. What happens from the regulatory and compliance standpoint to the exchange upon losing such a huge amount of funds?
So I can tell you from our perspective, we've never had that situation that's happened to us. We've been built, as I said from the beginning, we've been built on a compliance base, right? We build products that are designed and built with compliance in mind, both from an infosec as well as regulatory perspective, right? So that has kept our exchange and our business, our platform, very safe, right? So we haven't had any situations where we were the victim of those. when something happens to somebody else, so it's all hands on deck. Get onto the blockchain, see where the money's going. Is it coming our way? Do we see it coming? Do we know anybody that's been exposed to it? And start communication. At the end of the day, the industry is quite small. We all know each other, right? So you pick up the phone and you call your counterparty. Hey, how are you doing? Do you see anything? Can I help? They call you. Hey, I just saw that something was coming your way, and I think it's there. Can you freeze it, or can you put your hands on it? Can you help us? So those type of conversations are happening on a very vibrant basis right after the hacks, right?
Got it.
Internally, when it happens to a company, the first thing is, how do you manage the communication? How do you manage the regulatory messages? Those vary as well tremendously between jurisdictions. So it depends where the actual laws happened, on how do you communicate and how do you protect yourself from the regulatory consequences of it.
Yeah, that's clear. So one last question before we wrap up, and we can kind of summarize with that. Kind of a philosophical question, right? So you've mentioned, several processes that are going on right now, both in terms of, the technology keeping up with the compliance and the regulators, and so on and so forth. And obviously, the industry is growing, right? The industry is growing, evolving, spreading. Where do you see the industry in, let's say, 5 years from now? And again, you're coming from the TradFi space, and you know what's the end goal of all this. Where do you see the industry in this process in 5 years from now?
I only hope, right, that crypto will continue to be embedded into the financial system, right, and enhance the current financial system in ways that we cannot even think about right now. I often talk about trying, the challenge of trying to explain to somebody how Uber works in 1995, right? When all you have is your Razor, Nokia flip phone, right? There's so much innovation that is going to have to happen before Uber can become a reality that it would be impossible to imagine it right now, right? So for me, it's not about where we're going to be 5 years from now. It's the journey between now and then, and being able to shape an industry like the financial services and retail financial services industry that it's for the first time in decades has something that is revolutionizing, that is disrupting it, that is from the inside out, right? So I see 5 years from now, crypto will just be, and blockchain is going to be so embedded in everything that we do, that we're not even going to think about it. It's just what it is. It's the same way that we don't think about what life was before the iPhone, right? Because it's just part of our lives now, and we could not imagine life without it. It's going to be the same thing on the financial side.
Yeah, it's a very good point. We don't know what we don't know. We just have to build and enjoy the journey.
That's right.
Antonio, thank you so much. It was illuminating. Thank you so much for your time, and really appreciate it. And would love to have you back for some updates and to hear about the progress of crypto.com.
Happy to. Anytime. Thank you, Michael. Thank you for the opportunity to be
so
here
much.
and just chat about crypto, which is what I love. So.
Sure.
Web3 Watchdogs is sponsored by Cyvers, your one-stop shop for Web3 security and threat mitigation. Cyvers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cyvers.ai. That's CYVERS.ai.